Turn your losses into profit with this powerful Keltner Channel strategy. But before we start, let's see what is this indicator. The Keltner Channel is a technical analysis indicator that can be used to spot changes in market trends and volume. It is similar to Bollinger bands and moving average envelopes, except it sets the bands using ATR rather than the standard deviation. The Keltner Channel consists of a central moving average line and two outer bands that are typically set 2 ATRs above and below the central line. The indicator is used to identify potential buy and sell signals based on the relationship between the price and the bands. First, trend confirmation. During a well-defined trend, a breakout above or below the envelopes might be an indication of the trend's underlying strength. During a bullish trend, a break above the upper envelope might be viewed as an indication of strength, suggesting that the uptrend is likely to continue. During a bearish trend, a break below the lower envelope might be viewed as an indication of strength, showing that the downtrend will likely to continue. Second, overbought and oversold. Keltner channels can be useful for spotting overbought and oversold conditions in a market that is choppy or moving sideways. These situations are usually followed by price corrections in which the price returns to the moving average. And also, the distance between the upper and lower bands can reflect market volume. A greater distance between the bands suggests increased volume. However, a smaller distance indicates lesser volume.